What's good, guys? Hope you guys are good. Yeah, man. Uh, Today, guys, I just wanna share a support and resistance strategy break and retest. That I think if you can utilize this in a very in your in your own strategy, or if you can just copy this as it is, if you don't have any strategy as of yet, it can be uh, it can help you massively, right? It can help you massively, right? So let's just look at the previous week and talk about it, right? So you only check this on Wednesday, Thursday, Friday, right? What you're gonna need is you're gonna look for the market to move all phases, right? What do I mean by that? Let's have an example here. Let me just draw something here, right? If I'm talking about all phases, you're gonna need the markets for sell. You're gonna need the markets to trend up, maybe Monday and Tuesday to go up, then on Wednesday to do something of this sort, right? It can happen on the same day, right? This is all phases, guys. It means the market did go up and prices were rejected around here, so the markets went down to continue, maybe to come to this opening price, or where this whole move began, right? I hope I'm making myself clear on that, right? I hope it's clear. So this can happen on the same day or the following day, right? For for a buying market, you're gonna need the market to trend down first. After it has trend, the downtrend is finished, then you're gonna wait for the market to do something of this sort, right? It seems like a head and shoulders, but it's not always like this, guys. It's not always like this, and it's not always like this, but we're gonna look at a couple of examples then and see if you guys can understand the concepts, because when you are trading, what you need to understand is you are not uh, trading the exact pattern, but you are trading the exact concept, right? It's the concept, not the pattern itself alone, right? It's the concept. So let's just begin here, right? All right. So let's see what the market did. The market first went down, right? We can say this is a consolidation, or the market went down. Then on Tuesday, the market went down. So now on this day, on Wednesday, this is where you start to look for this thing, right? Remember, it is this phase has been completed. Now we are looking for the up phase. Let me just show you like this. So the market has already trended down. So now we are looking for something of this sort, right? And it's happening. You can see around New York session at 1 p.m. Right, the market created a bullish engulfing. So let's annotate this so that it can make more sense, right? So this is on Tuesday. This is what you're gonna do. You're gonna look for this pattern on Tuesday, right? You're gonna analyze it rather on Tuesday, right? So you had this. You wanted the market to remove this, which we call a peak, right? Peak removed, right? After that, it would be very helpful if you draw your trend line, right? You draw your trend line. After your trend line is drawn, then you're gonna wait for the market. You're gonna wait for the market to break this. If it doesn't break it, it needs to be doing something like this around it, right? It needs to be doing something of this sort, right? To show that it can break it at any given time, right? Um, it's gonna create maybe some sort of a pattern here, right? A candlestick pattern for you to go up with it, right? If it did not break this peak, let me reiterate, right? the market, it's either gonna break this peak. If it doesn't break this peak, it's gonna break this peak and come back down to test an area of interest, then goes back up. Or if it's not gonna break it, it needs to touch it, test it, pull back a little bit, then goes up, right? You're gonna get an entry confirmation around this area, right? So yeah, let's continue and see what's happened. Continue with our annotation. So if you see, we have some sort of resistance here. This is a point of interest, this is a support area, right? This is a support area, right? So we broke, that's why I said it's a break and retest strategy, right? It's a break and retest strategy. We broke above this resistance. We broke because it was a support, then broke, became resistance. Now we have broken above, we came back to test it so that we can push prices higher, right? On Tuesday, on Wednesday, I mean, then you're gonna look for this. This candlestick was first our confirmation that the market is willing to go up, but you don't enter on this candlestick alone. At least if it was bullish, it was a bullish candlestick. Now it's just a bearish candlestick, anything can happen, right? Then this confirmation right here was your way to go, right? Okay, but before I place my long position, I want to show you something else you can use on the same week. You're going to use the same the data of the same week, right? You don't use the previous week. That's a very different approach when you're gonna use the previous week's data, right? The previous week's data. So what I want you to do is to use the same week's data. You wanna take, if you wanna go high, you're gonna take the high of that week, right? So on this day it was on Monday. Then you're gonna look for the low that was created on that week, right? So what does this indicator does, right? This is a Fibonacci. It sets as you can see, we have a 50%. It's a equilibrium area, right? The area where the prices are just in the middle, right? This is the best way, this is the place where you are looking for your buys, right? It means the prices are at discount or at a half price, right? Anything can happen, but because now you have analyzed the market structure, it's more likely that the price is gonna go up, right? Because this peak has been removed, doors to the upside have been opened, the buyers have stepped in, the market is ready to buy, right? So after you have used this indicator, let me just show you guys the settings, right? These are the settings. These are the settings. These are the only settings that are enabled, right? These are the only settings that are enabled. So if you want to copy it, you can copy it. Then only stick to 50%, right? Around 50%, what price did, it's rejected, right? After it's rejected, it's your area of interest, right? It's your area of interest, right? So what you do, you need to take this, then you're gonna aim for the high, for the price to go above this high before you enter the retracement. Before you enter, you're gonna aim the price to go above that. If maybe price did not go above this, maybe it went up, came back around this area like this, if it did something like this, right, you were gonna aim the previous week's high, right, like this, above this, right? I hope that was clear. So let's continue. So on this entry, this was our target, right? Remember, the market is not always gonna hit you take profits. Sometimes you just have to take what the market provides you, right? So in this case, maybe if you wanted to take a risk to reward of 1:3, that's still fine, depending on your strategy. What is the minimum risk to reward? For me, it's always 1:2. After 1:2, I can take my profit, but if I decide to hold, if I can see that this entry has more potential to go to the upside or to go to my direction, right, I will hold it as much as I can, right? This is the first example. I hope it was clear. This type uh, of strategy I'm sharing, guys, it's all phases: support and resistance, break and retest. All phases: support and resistance, break and retest. What it did, the market first went down, then it came back, break and retest. So let's look for another one. You're gonna see it's gonna be the same thing over and over again. If it's not, you stay away from the markets. The concept has to be the same, right? So on Monday the markets went down. We are looking for buy if the market does something like this, right? On Tuesday we wanted the market to go up like this, then potentially give us an uptrend, but it didn't. It just went down. So you have no entry on this day, right? On this week. Remember, there are many pairs. You're not gonna be trading single pair. There are many pairs you can trade, right? Here the market went down, went up, it's consolidated. What we would have wanted on Tuesday is for the market, since it went down here and came back up like this, we would have appreciated if the market did something of this sort, right? If the market broke all of this, then potentially giving us a bullish momentum, right? So the market just consolidated for an entire week, right? So we move back to a previous week. Now let's see this. Come on, guys, this is a very, very powerful strategy, right? So we have this markets going down on Monday. On Tuesday it went up. Now all phases have occurred. Now what we are looking for on Wednesday, it's for the markets. We have, like, you have to anticipate as many scenarios as you can, but as long as they are telling you the same thing, right? This is what we anticipated, right? For the market to do something like this. Why something like this? Because here, around here, we had a point of interest, right? An area of interest, a support area, right? We had a support area, right? But the market did not. But that's still fine, right? This is another way to find this thing, right? If the markets choose to go up, remember, and what I was showing you on the week that we did not get an entry, what the market did, it went up, came back. This has to happen during New York session, right? This has to happen during New York session, right? So look at what it did. I'm talking about this specific formation. For the market to break all of this data, then come back, then goes back up. This is what the market's gonna do. It's not gonna be in the equilibrium state or equilibrium line or below equilibrium where prices are too cheap, but it's gonna be above everything, right? It's gonna be above everything, meaning the market can really, really go up. It's fine to take a buy or a sell depending on what type of formation you have. If it's gonna be below everything, then it means you are selling. If it's gonna be above everything, that's weak data. It means we are buying, right? So let's look at what the market did here. Let's do our annotation. On Tuesday we broke this, right? On Tuesday we are doing our analysis. The high has been taken out, right? The high has been taken out on Tuesday, right? Because it's not a peak. I think it's too, did some sort of a fake out here, so I wouldn't say it's a peak, right? There's some sort of a small fake out, right? But a high is broken anyway, right? Then let's draw our trend line. This was our trend line on Tuesday, right? On Tuesday could have drawn it like this, right? Could have drawn our trend line like this. And remember, and after we've drawn this trend line, we would have expected a retest to this area. Remember, I drew this area, right? I drew this area. But then, as you can see, price already tested it. But on Tuesday, we are taking this entry on Wednesday, Thursday, Friday, not on Tuesday. We waited for price. Then price did nothing, did not came to this area. We don't take when the market did this. We simply wait. What the market did was it then went up, did an impulsive move, came back up, came back down. I mean to test the structure, this weak structure that's this resistance that was created on the same week, right? Not the previous week's data, but on that same week, right? So it did that structure, it tested it. After it tested it, it did this bullish candlestick, right? Some sort of a pattern, a railroad pattern, right? So what you do is you take this, just to be clear about this, but you will know it when you want to buy. You start at the top, you go at the lowest price, right? Remember on our previous example, I said it's better to buy here or below, right? Green area. But then what the market did, it was above everything, it's outside. That's the second way you can go about taking this entry. You take this entry right here above it when it was testing this um, area of interest, right? You take it. Since now the market, we have an issue now. The market has broken even the previous week's data. You don't have a target, right? What I would advise you is to aim for a 1 is to 2,5, then you are done. You can also go for a 1 is to 3, that's still fine because it's highly possible, but a 1 is to 2,5, then you are done. You don't like, remember we are just using the same time frame, we're not changing any time frame, we're not doing any top down analysis, we are simply looking at the same time frame and doing this, right? This was the second example. I hope it was clear, guys. Let me just try to find another example, the last example, so that you guys can know that this thing is doable, right? As you can see, the market went up, didn't go down, so we had no entry. Oh, another thing, guys, since we went up, the market came back down, we can still go down with it. I forgot to show you this entry, but then let me just show you this entry, guys. Let me just show you so that you'll know that you can also get like more than 2 entries in the same week, right? After the market went up, it came back down, broke this structure, right? LTO, the low was broken, right? After this low was broken, the market closed here. Then what you needed was a point of interest. Look at this point of interest. Look at this point of interest, right? Look at this point of interest. Look at how beautiful it is. Now the market, it has moved the up phase, now it's moving a down phase again. What you then need to do is have a point of interest, then do your thing, man. Do your thing. Now you want to sell. Start at the bottom. You go up, highest price, then you are good to go. Look at how beautiful this thing is, right? Look at how beautiful this thing is. I forgot to draw this trend line, guys. Sorry about that. Because this has to be a system. You have to do it over and over again, right? The trend line was broken, the market broke this, it came back to this point of interest, it did an engulfing, right? So remember, if you're gonna enter here, your target is very much clear, the beginning of a trend line or the lowest point on that week, right? You place your stop above the candlestick that you entered on, then you place your take profit around this area. Look at this, 1 is to 3. 1 is to 3, RR, more than 1 is to 3, right? But you can just take 1 is to 3, put it to a round number. Look at how beautiful this thing is. Look at how it's playing on a green area. It's ready to sell. You don't sell around this area, but you sell around here, the green line, or you sell at equilibrium, or you sell below the red line, right? Red area. So I think this is gonna be my last example, guys. I hope you guys found this this video insightful. I will appreciate it if you leave a like, comment, like, subscribe, guys. As you can see, I'm low on subscription, right? I have no subscribers, uh, but I'll try to put as much value as I can. We're gonna keep on pushing. I hope you guys find this useful. I remember the days when I used to go on YouTube and I would find very confusing stuff, right? Something I could not use in my trading, right? I hope this uh, it's not BS, right? It's able to help you with your own trading, right? All right, guys. Like, see you next time. Beauty of the beast. Peace and love.